While this crypto winter is cold, it's not new. Crypto legend Michael Terpin has seen many of them come and go and offers a complex perspective every time he speaks. While the blockchain space is still a mystery to many, the reality is that Bitcoin was created almost 15 years ago. Michael Terpin has been a major player since the very beginning. We're honored to have him on our show for the first time. Michael, welcome to the Daily Drop.
Thank you. Glad to be here.
So we got to start with FTX. I'm sure lots of people are talking to you about it, but it is on everybody's minds. I mean, what do you make of the FTX situation?
Fraud and a huge lack of due diligence from the investors. I mean, I suppose at the height of a FOMO marketplace, people just are in a hurry to get into deals they think they can make money. But the fact that Sequoia Capital, who invested in one of my companies 15 years ago, didn't have a board seat for a $250 million investment shocks me.
And I mean, look, for anyone who doesn't know at home, Michael Terpin is a legend, specifically in the investing space. You just raised an interesting point, though, right? Like, how incumbent is it upon the investors to do that due diligence? Obviously, there were failings.
Yeah, the lead investors, absolutely, because other people are following on, figuring, well, Sequoia's in the deal. They've certainly looked at it, and obviously they didn't. The fact that, I mean, when you saw the new CEO come in who helped unwind Enron and said this was far worse than Enron, and that basically there were no corporate controls whatsoever. I mean, they spent $300 million just buying themselves homes in Bahamas, and nobody seemed to know what was going on. I mean, that was just an insane thing. And for the markets to sort of suggest that, U.S. regulated entities that have been around and successful for a long time, like Kraken and Coinbase, operate the same way is ludicrous.
It's interesting, because obviously I've been doing a lot of research, reading all about FTX and everything. But for you, who's like really a man on the inside, it's interesting the way you phrased that, right? So is it really that, like, anecdotally, when you're investing and then people kind of take the word for, oh, it's like Andreessen Horowitz is in, so I'm in, or DCG's in. Like, how does it really work that way?
It does work that way a lot because, I mean, the early angel investors are the ones who usually kick the tires the most and, look to read, not only the business plans and the white papers if it's a token, but they also, visit the offices and, interview people who are on the team and talk to other investors. And, you're investing primarily in the team, right? That's really early stage. And, Sam created a great myth around himself, but obviously somebody didn't keep looking once he raised all this money, and because again, I mean, I remember when I've had venture-backed startups, I started what's now called Globe Newswire. That was originally before the merger MarketWire, was originally called Internet Wire in the 2000s. And, we would have a board book every month that Sequoia and Hummer Winblad would be there and look over our financials and have the CFO present. And, that was for a company that, raised like, $16 million, not for one that, raised, $800 million. So it's just insane to me that there was just no board seats from these professional investors. And they just kind of just let Sam run his show with his, college friends all living in a big house.
So do you think that SBF's actions here are going to create like a new era of transparency financially for crypto?
Well, I think it'll have two effects. First of all, even though it was not a U.S. regulated entity, it was a Bahamas one, you're going to have the U.S. regulators come down hard and say, oh, we need more and more and more regulation. And the right type of regulation is fine. What the industry fears is that it's going to just lead to more and more people leaving the U.S., which is why you ended up in this situation in the first place. But certainly there's some great exchanges that have been operating just fine in the United States. I mentioned, Coinbase and Kraken. There are others. And, the other thing is that, yes, you are going to certainly have a lot of people realize that exchanges are not a place to store your crypto. They're a place to trade your crypto. So, within about a week of FTX going down, you saw a huge number of people moving Bitcoin and Ethereum from centralized exchanges into private wallets.
Okay, so Michael, we're gonna go to break. I have you for 3 more segments, and I got Michael Terpin here on the Daily Drop. Welcome back to the Daily Drop. I got Michael Terpin. Okay, retail investors are obviously scared for good reason during crypto winter, but institutional investment has made some big moves, right? We're seeing BlackRock. I mean, we've had Visa, we've had Disney, we've had big corporations. I guess my question is, do we think that this FTX scandal is going to change this way that sort of institutional investment is viewing the space, or are they just 100% in no matter what?
Well, institutional investment is a very broad category. So there's really savvy investors who've been in, the crypto markets, or at least looking at them for a decade. And I mean, because institution, you can include, very early venture companies and hedge funds in the crypto space, and investment banks. And then, you can talk about the ones that are, Johnny come latelys, like, big brands, and who are just dabbling and saying, gee, what does the metaverse mean? Will NFTs help me with the loyalty in the game? So the professional investors typically are the ones who are going to be buying at the bottom and selling at the top. And retail historically is the least informed. And they typically, they buy in when they hear that their neighbor made money. And so they end up, FOMOing in at the top and then panic selling at the bottom. And it's sad, but that happens in the stock market. It happens in, a lot of things. And, there are, shows that try to teach them not to do that. But that's typically how human behavior is. So, there was a funny New Yorker style cartoon that showed 2 tables. One said Bitcoin for sale, $69,000, had, lines around it. And it said Bitcoin for sale, $20,000, and nobody was in line.
Right. Well, it's that herd mentality. It's interesting the way you characterize institutional investment too, because no one's described it like that to me yet. But I haven't had someone as experienced as you. So, okay, let's talk about institutional investment then. Do you think there's a bit of that herd mentality as well? Like, is it like nobody wants to? Like, it's funny because I've been researching Theranos and I watched, the TV show and everything, and it's like once you get like one big name, it just seems like everybody they stop doing the due diligence and they're like, oh, Walgreens is I'm in. It just seems like once you get the first one, people just kind of like don't want to miss out. Is that fair?
Well, again, if you're talking institutions who are funds that have a large number of limited partners, like in a hedge fund, et cetera, one of the things that they'll get fired for or lose their capital is if they're the one that missed out on some huge opportunity. It's like, why am I in you and you're paying all these fees? I'm paying all these fees and you missed out on this, and the other thing. And so they have to, they're being paid to outperform the market. So they have to make some riskier bets. And a lot of times they do follow the herd.
It's interesting, right? Because obviously there's some sort of error there with the economic incentive. But okay, speaking of economic incentives, right now, like people are really starting to experience a recession. But do you think that this is a good thing long term? Like, do you think now is the time to sort of be all in on the space, or like what would your strategy be in this sort of trying time?
This is not new. Crypto tends to work in 4-year markets, just like the stock market tends to work in 10-year markets. Except with the stock market, usually most years are up, and then you have a couple of years that are down drastically. And with crypto, you usually have one up year, big up year, out of 4, and you have 3 years, 1 year it's big down, and then 2 that are somewhere in between. This past year was the big down, and so that's when everybody's saying, "Oh, sell, sell, sell." It's going to go down to 6,000 or whatever the worst case fear situation is. But if you look historically, this is the best time to slowly, buy back in, because with retail out and with a lot of short sellers in, bad news gets amplified much more than it would during a bull market or even a sort of sideways market. And so, there may be one more, shoot a drop. But there's so many people that are looking to buy at, under 10,000 or 11,000, that's very possible that it never gets down there. That happens every market. And so you just have to be very cautious. But, in general, with these 4-year cycles, if you buy it in the bottom 20% of the market crash and you sell in the top 20%, you've doubled to tripled your money, even this last cycle, and you did way better than that in the 2 cycles prior.
We only have 20 seconds. Just a yes or no. Do you think this is the last crypto winter before the space goes mainstream?
No.
Oh, provocative. We got Michael Terpin here on Daily Drop. Welcome back to Daily Drop. I got Michael Terpin. I will say, look, Michael, I'm really enjoying just talking to you because it's so clear how well you know the idiosyncrasies of the space. So before the break, I asked you the question, and you said no, which actually surprised me. So I was like, oh, let me ask you again and understand why. So, because a lot of people keep saying, oh, this will be the last crypto winter, and then the space is going mainstream. And you said no very definitively. Why?
Well, the stock market's been around for 150 years, and it's not like they've had an end to cycles, and it's pretty mature. There are business cycles, and there are business cycles in crypto. As I had said, they're typically every 4 years. They get a little bit less pronounced each time as the asset class grows larger. But look, we're nowhere near mature. I mean, we're still 7-8% of the population. There's still a lot of people who barely heard of Bitcoin, much less own any. And when we get to 1 billion users globally, that'll be good. But it's not where the internet is right now. Vitalik's dad, Dmitry Buterin, did a chart a couple months ago where he tracked the growth of the internet year by year to the growth of Bitcoin, and we're right now in about 1997 if you sort of track it. So in 1994, I remember when people would laugh at you about the internet being big, they'd be like, "Oh, who uses the internet?" It's like, just foreign exchange students and professors, and it's never going to go anywhere. And that was a prevailing thought in 94. Today, who doesn't have an internet in the world? I mean, it's 6 billion users. And I think that's where we're going to be in 20 years with cryptocurrency and the blockchain.
Yeah, look, I mean, your long-term perspective, just fascinating, just to see how your mind works. You did reference Vitalik Buterin, though, which I thought was interesting, because celebrity culture is really becoming a big part of crypto. Like you yourself are, you're a crypto celebrity. There's Vitalik Buterin, there's Brian Armstrong. It was Sam Bankman-Fried, and now he's the infamous Sam Bankman-Fried. But what sort of impact do you think celebrity culture is going to have on crypto culture?
Well, first of all, the first 2 that you named are innovators, not celebrities, and not just there like Kim Kardashian. I mean, Brian, started Coinbase when he was in his 20s, and he's worked hard and built a giant exchange and, been through all the trying times, and he's going through trying times right now. And I think he's done a great job as an entrepreneur. Vitalik, I worked with, at the start of Ethereum when I first met him. He interviewed me because I was better known than he was in 2013. And then, Anthony DiOrio introduced me as, this kid that he, sort of given some seed funding to write a white paper called Ethereum. And, obviously the rest is history. And, he's, again, a genius and a hard worker and a visionary. And it's not like Ethereum hasn't had its challenges. It's having challenges right now. But I think that for the most part, as long as Vitalik is running it, I'm still confident it's going to continue to be, they say Bitcoin is digital gold and Ethereum is digital oil. And it right now is what created the space of DeFi, of NFTs, of the metaverse. None of those are built on Bitcoin.
Right. Look, and you're right. I mean, the people who rise up to these positions of fame, right, these status positions, they're doing the work. But I guess I look at the Sam Bankman-Fried situation and I go, he obviously didn't do the work. He was lying. He was pretending to doing the work. He was misleading investors. But he was always tweeting. Even when he stepped down, he was still tweeting. And I just feel like the celebrity aspect of crypto is alluring and maybe attracting the wrong people. What do you think of that?
But you could say that about the stock market too. I mean, you mentioned in a break about Theranos, right? I mean, it's the same thing. I mean, it's people sometimes, see fame and fortune and want to be associated with it. And, it's you have to have the due diligence to be able to tell, the real thing from a scammer. And, this is not unique to crypto. All I have to do is mention Bernie Madoff.
Yeah, I mean, and it's terrifying, right? And that means there's going to be more of them. I mean, do you think that this is an inflection point for crypto? Or do you think this is just going to be just another story in a long line of stories?
No, I think it's just part of the cycles. There will be more scams. There will be more successes, right? I mean, it's not like the history of the stock market was free of trouble.
Yeah, well, there's just so many. It's funny. I've been researching the number of financial catastrophes and scams and Ponzi schemes, and there's just so many you can't even keep track of them. But Michael, look, I'm so happy to have you here. I got you for one more segment. We got Michael Terpin here on the Daily Drop. We're back to the Daily Drop. Got Michael Terpin. Okay, so Michael, let's talk about the future. So even though you are an OG for this space, there's still many people who don't know anything about crypto, NFTs, metaverse. My mother's one of them. But how much bigger do you think Web3 gets?
A lot. Again, I think we're sort of very similar to where the internet was right after the dot-com crash. People were saying, what were we thinking? We thought that people would go and shop online, and now we realize, Amazon's going nowhere and everything is going to be bought in stores. And obviously that was wrong, even though the price of Amazon went from $1,000 down to $4 and people were shorting it. Obviously it was really good to pick up Amazon at $4 back in 2003.
So I know many people use the baseball inning analogy, which is maybe imperfect, but I do think it is a bit instructive. So if 9 innings is, the sort of duration of the crypto world, what inning are we in right now?
I think we're bottom of the second, maybe start of the third, top of the third.
Right. So
all
right. Sorry, continue.
And again, it's hard to make that analogy because a bulk of the wealth, at least for Bitcoin, was made in the first 10 years because of the incentives that you had for people, mining it or buying it when it was a penny. I mean, 10 million of the 21 million Bitcoin that'll ever exist, were mined in the first 4 years at an average price of under $1. The people who were believers and who held on to it are fabulously wealthy now. Of course, Satoshi probably figured that there would be people who would have weak hands, and then the next people who thought it was an opportunity at $10 would buy in, and then $100, and then $1,000, and someday 100,000, and some people believe 1,000,000.
It's useful to hear you say the bottom of the second, like top of the third, or something like that, though, right? So because anyone doesn't understand baseball, it really just means we're really just beginning, right? Like there's so much room to grow, and you hear sometimes the irresponsible mainstream media will say things like crypto's over, it's a scam, I told you it was meaningless. But it's important to understand we're still really at the beginning of this thing.
Well, there's a site called BitcoinObituaries.com. I think they're up to about 400 obituaries now, dating all the way back to 2011. And so pretty much every year somebody's called Bitcoin dead. It's not dead now. And it's not, it still works just fine.
Okay, but let's think about the future in terms of institutional investment, right? So we've got Wall Street, we've got major corporations. They're starting to dominate the space. And to me, that seems a little bit different from the peer-to-peer world that Satoshi Nakamoto envisaged, right? What effect do you think that this is going to have?
Yeah, I think the biggest danger in terms of institutional behavior is if you have a world where, like gold is, that it's primarily paper gold and not real gold. And, when people say they've got gold in their portfolio, do they really have gold bars? Or do they have a piece of paper that says they've got a future or an ETF that is leveraged 30x, right? And so it's disconcerting that the current SEC allowed, several Bitcoin futures, plays to go out, and they would not let a spot market ETF go out, which is actually a lot more transparent, and you have to hold what's in there. And I think that's the biggest issue. But at the end of the day, if you hold the actual Bitcoin, if you hold the actual cryptocurrency, you're kind of unaffected by the market swings as long as you're, not panic selling when somebody else is panic selling.
Michael, you're a fountain of knowledge. I appreciate you coming on the show. I hope you'll come again and again and again, because I just respect you so much, and I'm just so happy that you came.
Well, you're a great interview. I'm happy to come back.
Thank you, sir. It's definitely a blessing to get someone as esteemed as Michael Terpin on our show, and you can just see like the experience and the wisdom. He was definitely worth the wait. But it also shows you how a star system is emerging very clearly in Web3. The next stream of famous faces of the tech industry will eventually move on from Steve Jobs, Bill Gates, Elon Musk, all the names that you already know. The next names, our thought leaders, will be the pillars of the blockchain community. The FTX debacle has really started to push crypto news mainstream. And while crypto winter continues, there is light at the end of this tunnel. We'll see you next time on The Daily Drop.